Those Houthi attacks in the Red Sea are already adding to the cost of shipping as vessels are diverted to Africa, away from the Suez Canal in the Middle East. CNA's Roland Lim spoke to an analyst from DNB Markets in Oslo about the uncertainty the attacks have brought to the industry.
I think that's what we need to see, especially for these early container liners that were quickly adapting to the situation by sending vessels around Africa instead. To get back to the Suez Canal, I think we need to see quite a dramatic shift in how safe that the transit is perceived.
Could diplomacy work as well? I mean, Saudi Arabia is on the verge of a deal to extend a ceasefire with the Houthis in Yemen. I mean, this could also extend to the Red Sea as well.
It could. So there are many opportunities here for this to be resolved. But still, there's a lot of uncertainty, and uncertainty is in itself a reason why we've seen an increase in shipping costs starting. And then let's see where this really ends up. Another important point here, and I think it's important to point out that for many people that are looking at this sector from the outside, we have the post-pandemic surge in rates and costs pretty fresh on top of our heads. But I think the situation this time is quite a lot of different from what we had back then. And I wouldn't necessarily, compare the two when it comes to the potential impacts of this on the freight costs, because then you had a lot of different forces working in the same direction, which led to a dramatic increase in freight costs. But at the moment, especially if you look at the container side, which I think is most in focus here, there is a lot of slack in the capacity for commercial shipping, and that at least gives you some relief to manage this in the near term, as long as this doesn't drag out for a long time.
You mentioned workarounds for the shipping lines. I mean, the Cape of Good Hope route reduces effective capacity for the Asia-Europe trip by 25%. How will this actually impact the bottom lines of shipping giants like Maersk and Hapag-Lloyd?
That's the interesting part, because just from the face of it, you're going to increase the fuel cost. And on our numbers, that would be somewhere between maybe 6 to 8%. But then again, you soak up a lot of excess capacity. That has been the issue for this sector, with rates dropping nearly 90% from their peaks. And the funny thing is that once you soak up this capacity by sailing the longer way around Africa, the market gets you see the willingness to pay for freight increase quite dramatically. So the funny part of this is that the liner operators, they actually benefit on their top line from sailing vessels the longer way around, as long as people are willing to pay for that. And therefore, you can see from the shipping side, it's strangely enough positive that you get these types of disruptions.